What's up, everybody? Today's Friday, October 27th, the last week of Finding Your Way series with Easy Win 123. He's going to do some recaps on his last week. Hopefully, he had a good week. So, like that, we can kick off his live trading next week. And his the beginning to a consistent trading career, hopefully, um, which I know he can do. So, yeah,
I
let's
can do it.
let's jump in and see what you got.
All right. Hi there, everyone. So yeah, this is my last week. I'm happy. I think I've been expecting like this week. I just wanted to go and trade live. So on the other hand, I know I'm supposed to be on sim, but yeah, I started my last week while trading sometime on my real account, and then sometime I'll switch to the sim because my confidence did increase. But unfortunately, like I said, I did take a few scalp trade on my real account. It went well. So far, the account is positive. I'm talking about the Apex account that I'm growing in order to pass this evaluation level. I'm being conservative. I'm taking 4 to 7 points and then I'm locking them in just because as well, one of the first thing I need to do right now is to protect my capital. So, so yeah, so this is my first trade. That was on Tuesday that this trade happened on the 24th, 24th. Yeah, that was on Tuesday. Lately I haven't been trading much also because it's end of month, end of the quarter, sorry. So we have a lot of accounting work to do, taxes to pay and stuff like that. And my coworkers, when they're there, I cannot trade because there's too much distraction around me. So this is my first trade that I took on Tuesday. I was being patient. It's a trade on the 1 5 minute, if I remember. So yeah, this is my 1 minute. And again, still following the same setup. I'm waiting for price action to break below the 10 SMA, expecting a cross. It's not my A plus setup, but I was expecting a cross. So that's the reason why I got in. On this one, if I'm checking RSI and MACD, so RSI is on the lower side, MACD is on the bearish side as well. So the trade went in my favor. I think this trade I took 72.68. Okay, yeah. I took a quick 4 to 7 points and then that's it. And yeah, on this one, I do have to say this is not the best entry. As you can see, I entered here on that candle. And the next candle, it just pushed up. But like I said, I was confident just because everything else was bearish. That's the reason why I went in.
Were you timing it from the 5 minute or longer time frame?
Yes, 5 minutes.
Yeah. Because what I've come to find out is that you time it on the like I would see a bear signal, right? A short signal on the 5 minute being like the 50 like price actions coming up into the 50 or tag the 50 SMA on the 5 minute. Now when I jump over to the 1 minute, it would be like the 10 SMA. It's just an example, right? Right
Exactly.
here, you could have had a better entry if you would have waited maybe 2 bars. If you would have
Yeah,
waited this green
I
one
agree.
to
Yeah.
finish, and then even this one, you could have waited a little bit. Because what I like to see is small little candles like this, because it kind of created the pullback high. I would identify that as the pullback high. This little red. Oh, hold on, what's that?
Which one? The big green candle?
No, the next one, the red candle right here, because of that little wick, it kind of created
Uh,
a
I
pullback
mean, I don't
high.
see anything. Okay, now I see it. Perfect.
And then I
Oh,
would have
this one? Okay.
entered, and then I would have entered at the break of the 50 or the break of the one tick below the body, right there.
Mhm.
Entered there with the stop right here, and then you could have caught it and locked in right there, or locked some in right here to scale out at the 100.
Six. Yeah, that's my 200 right there. Yeah,
Yeah,
that's
at
the
the
200.
200.
Mm-hmm.
Because remember, if it breaks that level, what's it going to? The next level, right?
Six, six,
It
six.
broke the 50, came back, retested the 50, and then you wait for the retest of the 50 to go back down to the 100, right? And then it breached it right there. So it didn't shy it. Sometimes what it does, it'll shy it, come back, tag the 50, and then go back and then retest or smash through. This time
Mhm.
it tagged the 50 or it tagged the 100.
Yeah.
It went a little bit above below it and then came
Mhm.
back. And then as soon as it retested the 10, if you missed this entry, you could have caught that entry right there,
On
right
the
here,
on yeah.
off the 10.
Uh,
Because
correct.
I've noticed once your A plus setup um works out,
Yeah.
there's gonna be another pullback, but to the 10 instead of the 50.
Correct. That's my B plus. That's my B
Yep.
setup when it
Yep.
goes back to the 10.
hmm Um, so you could have done those two entries, and then since it broke the 100, if you entered here, your target would have been the 200, or at least lock in 75%,
Mhm.
50, 75%.
Yep.
And
Mhm.
then since this one broke it pretty strong, it's a big, strong candle.
Yeah.
I would have expected it to come back, retest the 200, and then come back down for a 666 tag.
Correct.
But good
And
trade.
that's exactly how it happened. And like the way you said it, yeah, that's how it happened. But then again, yeah, I was like, I'm on protecting my money right
Yeah, yeah,
now.
that's fine.
Like,
That's
yeah,
fine. If even if it doesn't, because even you don't really use a 666, but I'm giving you targets to hit. You know what I'm saying?
perfect. Got it.
It's not that it was a bad trade, but just keep in mind that once it breaks that level, which is the 100, you know that it's
Mm-hmm.
going to come back. Look at right here. It kind of broke the 100, came back, retested it to
Yeah.
the 10 again. Then it goes to the 200. Once it breaks the 200 with this strong candle, once you see one candle go through it and you missed it, let's say you missed this entry right here, because it
Mm-hmm.
retested the 100. At that point, your target would be 200, but it's not worth it, right? So you would probably hold on a little bit more. But you see this big red candle right here, bust through it, then you know for sure it's probably going to come back, retest the 10 and the 200 right here again, and
Yeah.
then come down. And but
Go for 6.
that being said, if I see this play right here, I want to see the 10 pointing down like that. I don't want to see the 10 flatten out like this.
Okay.
If you start to see it flat, just remember in the first couple of weeks, I always tell you the next fastest moving average will flatten out before the the move happens. Case in point, the 200 right here is flat, right? It's
Mm-hmm.
already flat and the price action's coming down to it. So instead of going up, how these are up, see how these are up? These are up.
Yeah. Mm-hmm.
Even over here, you kind of start to see it crest and start to flatten out. Like right here, it broke the 50 and then the 100 start to flatten out. You can see it ahead of time. And then price action
Okay.
hits, it flattens out. And then this one's going to start pointing down over here like this. And then look, you already here, you cracked the 200, you cracked the 100. Look at the 200. It's already beginning to flatten out again, or the next one starting to flatten out.
Mm-hmm.
And then this is going to create. It's going to go like this.
I find myself sometime, whatever, like something that I need to correct on my case. Sometime, like, when I'm taking some profit, I'm taking the profit on the pullback instead of taking it when it's in strength for me. It's like the pullback is scaring me, and then this is when I take profit. I don't know if you've noticed that sometime that happened. Like on this big candle, yeah, I took profit at the right time, but I know my next target was supposed to be the 666 because it already broke the 200.
Mhm.
But then I was going back up, and then I see my money going down. Unfortunately, yes, I was looking at my P&L, and then I'm like, oh, and then I just covered, and then after that, it just continued freaking all the way down.
That's where you kind of got to set a level. And that's why I mean, you want to try to plan ahead of time, right? Like you caught it up here. Right here, you should have had a plan. You should have said to yourself, my target's a 200. If we get to the 200, I'm locking half or 75% in, right?
Okay.
if you don't have a fishing order there, if you're not using ATM or don't have a fishing order um, attached to it, then if you see this big strong candle, then hey, close out 50 or 75% below that. But just keep in mind that it already broke the 200. So now you're looking for the retest of the 200 up here somewhere.
Okay, so I'm looking for the retest. So when it break that level, I'm looking for the retest, which is the pullback.
Yep. And
Okay.
if the retest doesn't like if the retest is stronger than what you think, then just close out your trade.
Okay.
Or the second option is let me look at a longer time frame. Does a longer time frame still look bearish? Does a 5 minute look bearish? Does a 30 minute look bearish? Because remember, the longer time frames outweigh the shorter time frames.
Yeah.
So in this point, if you've seen bearish on the 1 minute, bearish on the 5 minute, bearish on the 30 minute, then you know that you can hold on for a 666 tag. But let's
Yeah.
say it's popping up right here.
And then when we're talking about like a longer time frame, we just go up to the next one, right? So
Yeah.
right now, this is the 1 minute. We're talking about the 5 minute, not necessarily the, let's say, 30 minute.
I would check like let's say the 5 minute is bullish and the 30 minute is bearish. Look to see what the candles look like. Do the candles on the 30 minute look strong or do they look small like this?
Okay.
If the 30 minute has big candles like this and it's bearish, even though the 5 minute is bullish and it has small green candles like this, then you know that the 30 minutes probably going to be take precedent over the 5 minute or the 15 minute. But I usually notice either the 1 and the 5 minute are bullish.
Mm-hmm.
So that means that there's going to be a bigger pop that's going to cause a pullback on the 30 minute.
That's right. It's gonna go to the 30.
Yeah. So then it's going to
Yeah.
pop, right? Because the 30 minute is still bearish, but that tells you that you could catch a counter trend pop on the 1 minute or 5 minute. But let's say the 1 minute is bullish, like on this instance, let's say it's bullish on the 1 minute, right? But the
Mm-hmm.
5 and the 30 minute are bearish. Then you have to look for a level. You have to look for a level on the 5 minute that the 1 minute can potentially bounce to.
Okay.
Whether it's a
Okay.
moving average. So let's say it's right here, right? Because usually it's one moving average away. So if price action is on the 200, if price action is on the 200 on the 5 minute, then it's most
Mm-hmm.
likely on the 100 EMA on the 1 minute, right? Because you're
Okay.
scaling out, right? Or you're
Yeah, I get it.
going from
I mean,
volatile.
I see it, but okay, but I'll take that into account. Like, look at the bigger time frame just to see
Yep.
if there's a longer move
Yeah,
that
because
may or potential.
let's say you're on the 200 on the 1 minute, so that means on the 5 minute you're probably at the 666.
Mm-hmm. Yeah,
So remember I told you on the chat yesterday, hey, you were scared to take it short because the 30 minute was bearish,
yeah,
but the 5 and the 1 minute were bullish.
that's right.
And I told you, look at how price action is reacting around that level. Is it being skittish? Is it busting through that level? Or is it coming up to that level slow? Because those are signals that might signal, okay, it's losing weakness or it's losing strength. So the 30 minutes correct and it's going to be bearish.
Okay.
That's what I was
But okay,
referring
on
to.
this one, I'm not 100% still, I'll say, confident on it. So when you say look at what price action is doing, like I said, my first reflex was to look at the level 2, like the super dom on ES. That's what I did,
Mm-hmm.
and I got a bit confident just because I saw sellers stacking up on the ask.
Yep.
So then that's when I like, anyway, I have that trade. We'll talk about it when I get to it.
Mm-hmm.
So yeah, that's what I did. But I saw sellers stacking up, and then I'm like, oh, then maybe it is really a resistance. and then I took a partial entry. And then after that, I was just adding to my position as it was going down, and then it worked out. So,
but this little pop was caused by these wicks over here. Most likely these wick right here. This wicks.
yes, so far.
So once you take that out, once you take those wicks out, and you did right here, see how it went below it? Then you know it's just these, when it pops up, those are stops getting stopped out. Those are stop losses getting hit. So you look to the left, you see wicks, you know there might be a pop because there's going to be stop losses getting taken out. And they got taken out, it caused the pop, probably confirmed up here, and probably continue going down. So always look to your left. The bigger the wick, the more orders there is there that didn't fill.
Okay. The bigger the wick, and not the more wicks there are.
Or even then, like right here, look at all these little wicks caused this pop.
Okay.
You see what I mean? Like there was probably stops right here, and look at this big candle right here took out all these stops that were right here, and it caused that pop.
All right. Okay.
Good trade.
Yeah. All right. So now here's my. Okay, we're done with this one. That was on the 24th. Wait, I think that's my trade on the 25th. They're almost, yeah. Like what I'm finding is that all my trades look the same, but I swear it's not the same.
That's
trade,
what you
guys.
want to
It's
see, dude.
different trades.
That means that you're following your setup. You're following
Yeah.
your strategy. If they look different, then something's off
weird.
because
Exactly.
you're not taking your strategy.
So yeah, on this one I had a much bigger trade, and as you can see, this is on the sim. I didn't do it on my other account, on my real account, so I was able to capture more points. This is a 5 minute. I don't know if I have the 5 minute for this one. Wait, let me just see. I just want to see if I have the 5 minute for it. Trade on the what? What's the date? The hell? Date the 25th. 25th.
Right there.
No, that's what I have open. Oh yeah, there you go. Here's the 5 minute.
Yep.
Yeah, there you go. Yeah, that's the 5 minute. So this trade on this one, yeah. So the 5 minute is bearish, as you guys can see. So the 50 is over the 10. And all I'm waiting for is either taking my A plus setup, so which is when the price action touch the 50 SMA. If not, my B setup, which is when the price action reaches the 10 SMA for a pullback down. Yep. So on this one, yeah, they were all good.
But your B setup is with the 10 below the 50 SMA.
Correct.
Yep.
Yeah. That's my B setup. So the 10 below the 50 is my B. Yeah. Well, yeah, I mean, I always take my trade on the 10 below the 50, like regardless if it's my A or B setup, except for the C setup, which I rarely do. That's when I'm trying to anticipate that cross, like the bearish cross. It's rare that I do it, but sometimes I do it. Okay, now, so here's that trade on the 1 minute. That's what it looks like. So on this one, when it reaches the 50 SMA on the 1 minute, most of the time it's because it's my A. Well, this is my A setup actually. Yeah, not most of the time. This is my A setup. So yeah, price action went to it, and then I was watching level 2 as well, I remember. And I saw a lot of sellers, and I'm like, okay, perfect. They're gonna bring it down. So I entered. I was confident because right above it, we had resistance. The 200 was right there. The 600 was way above. So I'm like, there's no way it's going to go and keep going. So,
but look at the 200, how it is. See how it's slanted, sloped down?
Yeah.
That means that it's still going to continue going down. Like if the 200 would have started flattening out right here like this, then you know that it's probably going to have that eventually it's going to come back up over here and start to do this.
Yeah, bigger and back.
Yeah. But see how sloped That's the biggest thing about the moving average system is you have to
Check the
pay
slope.
attention to the slope of the lines where price action is relevant to. So like right here, the one with the blue lines 100, right?
Yeah.
See how it's already sloping up? So a bigger time frame. First it started with the 50 down here. See? The 50 slopes up. Well, I'm sure it started with the 10, but it slowly starts to converge all the lines. But then look at the 50 said, I'm going back down. So just pay attention to that because you're
Okay.
like, well, Semper said that it's going to flatten out before it starts to go long. But look at in reference to where the moving averages are. The other screenshot was they're already all flattening out on the top, right?
Mhm.
They're slowly starting to flatten out. Over here, it's barely beginning. When it's barely beginning, it has a bigger chance of it failing. Because one of the things that I told Pete the Cat was when the 200 and the 666 spread from here to here is between 20 and 25 points away on the 1 minute chart. When they're spread apart 20 to 25 points away, pay attention to the moving averages because it will most likely start to trend reversal. I've never seen it more than 25. Maybe one time I seen it like 27
Yeah.
points. And that was
Okay.
like an
So,
extreme move. Like it was like that time cycle day. That time cycle
okay.
day caused like a 27-point spread, almost a 30-point spread. That was the first that I've seen it. But 80 to 90% of the time, when the spread between the 666 and the 200 are 20 to 25 points spread apart,
Yeah.
start looking for a potential reversal. Like if they're
Say that
20
again. Say that again. When the 666 and the what?
and the 200 are
And the
between
200.
20 to
Yeah.
25 points apart. So like right there it says 31
Like, yeah. Right now,
or
there's 30
50.
points apart.
There are 11 points.
Oh, it's 40. Oh, I thought
Yeah.
I saw 20.
There are
Okay. Okay.
11
Okay.
points apart. So you still
Okay.
have about another 10 points down.
Okay.
Not
Before it start
price
really
action,
wants to
but the
reverse.
200 another point, the spread between these two have to be 20 to 25 points. Not saying that it's going to reverse when it
Mm-hmm.
hits 25 points,
Yeah.
but
Yeah.
start looking for a potential reverse. How do the moving averages look like? Okay, it's looking like the 50 is going above the 100 or whatever the case is.
Yeah. Then in that case, here's my question. Now you told me that on the bull side. I want to know it on the short side. So what am
What
I
do you mean?
supposed to see?
The
Because
same.
you said when the 666 is separated from the 200 by like 20, let's say 20
Yeah.
points, price action might or may have a greater chance of reversing.
Yep.
But me, I want to see the opposite,
What do you mean?
right? Because price reversing, that means it's going up. So it's against me.
Yeah.
But that's what I said. Can you find me a scenario that it's in my favor?
Yeah, right now it's in your favor because you still have another 10-point spread down.
Oh, okay, okay. I still have 10 more. Okay, okay, got it. Perfect. Yeah, I understand
But
how you
if it
said it.
was spreading on the top side,
Mm-hmm.
then it would be against you. All the
Okay.
moving averages on top.
Yeah, yeah, got it.
And rarely does the 200 666 fail cross unless it's like CPI day or something where the 200 is like right here crossing the 666 and it goes back like this. It rarely does that.
Okay. Well, okay. You mean like okay, come down and then
You know
push
how you
back
get
up?
the, yeah,
Yeah,
like this kind of 50 fake cross right here and it's going to come
yeah,
back
yeah.
down and cross. That's what I'm
Yeah,
saying.
just like right here on the MACD, like
Yeah.
sometimes it does
Uh-huh.
that and then it
Yep.
reverse, and you're like,
Yep.
fuck.
Yep.
But
Yep.
okay, perfect, I get
The
it.
200
So it's
666,
rare.
they're so slow that it rarely happens.
Perfect. That's good. That's good. Okay. All right. More baggage to my
Yeah, more
more
tools,
baggage for me.
more indicate, more indicated.
More
Hey, we all got
tools in my
baggage.
Yeah,
baggage.
baggage is bad. Baggage is bad. You don't want a bag hold.
I meant more tools.
Yeah, more
Sorry for my
because
English.
all this comes with Screen time. I've seen the moving averages for 5 years straight. And it's just like, okay, well, it likes to do this, you know? And when you start to see it flatten out, that's like one of the big signals. A signal, remember, not an indicator
Yeah,
indicating that's going to move. It's just a signal to start looking for potential trend change or a counter trend pop.
perfect. Okay. So yeah, so that was this trade. Yeah, that was a good trade for me. Whatever, I was able to capture 10 points, and then I close it off and call it a day. That's yeah, that's it.
Yep.
So yeah,
Anybody have
one
anything
trade.
to add or any questions to ask?
Mhm,
I know it's a
mhm,
lot.
mhm.
I mean, I gotta
Mm,
say, just as a general comment, great trade, and also like, we started off conversations today talking about patience and like easy. You've gotten so much more patient, so much more choosy. Like, it's real good, man. The progress is very, very obvious.
Judy has a comment. She says that she uses candlesticks on the 1, 5, and the 30 minute, but she has a problem getting in short, even though I see the short coming. I had that same problem. I had that exact same problem. Not until Easy started, we started this with Easy, I started getting way more confident and way more comfortable taking shorts. Before this, I probably took 3 shorts the whole year. Now I've taken probably about 20 shorts. So it just comes with screen time and try to I don't know what your strategy is, Judy, but if you're using the moving average system, the 1050 cross, like Easy's using it, is a good way to see shorts. The 1050 cross that he uses is like right here. See how it crossed the 10 crossed right here, the 50? The cross right here across the 50. So he won't even get in short, even though there's lower highs right here. He won't get in short until it retests the 50 right here. Well, he got in short over here because he missed that one.
yeah, exactly. I missed it. I was like, fuck.
So he could have got in right here, but look, it came back, retested it again. And this is even a weaker. Uh, that's a good sell candle because it's saying that it has a lot of selling pressure right here.
Yeah,
And it took
that's
out this.
well.
It took out this little order block. That's why it probably popped. It popped up. These two little wicks.
Mhm.
This wick took out all those stops right here, which caused that wick to get sucked up. But the selling pressure, this strong candle right here, um, took out or had the strength, and then it came back, and then those stops were taken out, and then caused that wash.
Mm. Also, usually when I see that big red candle right here, I'm like, okay, I know it's gonna retrace back, but most of the time it retraces to the 10, like it retraces to
Yeah.
that moving average
Yep.
right here. It doesn't even go past it.
Yep.
I was surprised that this candle had so much strength because I was like, okay, it reached my target. Do I enter or do I wait? Like, but remember, you always say don't get in on the opposite
Yeah.
move. Like I'm looking for a red candle,
Yep.
so that's why I waited. But then when it hit that, it hit it so quick, and then after that, I just saw selling coming, and then I entered it.
That's what
So,
you want to see. That's what you want to
uh,
see. You want to see it hit, and that's why I always stress candle development, and that's why I was telling you how is price action reacting to that area. Like if you see the candle hit this 50 SMA and immediately get sucked down, then you know these stops got taken out and sellers are coming in. Sellers are coming in because they already know that the buyers got taken out right here by this wick, and they come
mm,
in and the rush comes in. That's why it's always better to wait for that candle to finish because you know the rush is coming in and you get in with
yeah.
the momentum right here on this candle, and then you just write it down.
Mm. I've been trying to get in with the hedge fund. I'm like, how are they getting in? Where are they getting in? Because sometimes I see, anyway, whatever. I know I have to be more patient on it.
The hedge
Sometimes they
funds,
don't wait for a pullback or anything. They just hit the level and then boom, they short it. I'm like, fudge.
the hedge
Like,
funds always get in the liquidity zones. The
mhm,
liquidity zones are these consolidation zones. The ones where they get heavy in is when they have those big wicks up here and they already stop loss hunting. That's all they're doing is, okay, we know on this wicks right here, there's a bunch of freaking buyers. Like
okay.
these wicks right here, probably buyers, the newbies getting in thinking, oh, it's gonna go all the way to the 666. Okay, there's still orders right there. And then these ones take these shorts right here, take all this out, and then look, causes these wicks down. Is there a question?
Who asked that question? Pete the cat. Oh yeah, Pete. It's just because I missed it. The only reason why I didn't enter, Pete wanted to know why I didn't get in sooner,
Yeah.
like right here. Yeah,
Yeah.
it's just because I missed it and then I waited for it. That's all.
Okay, thanks.
Yeah, like I said, because I trade at work, coworker talking, bosses talking.
Yep.
It's the
People
worst
get into it.
combination. Worse.
You tell them you're charging for trading lessons and to let you trade.
No, one day I'll just be like, I quit. You know what? I
Yeah,
quit.
exactly. I got 49 days and hopefully I quit too.
What?
Oh man.
Yeah.
Okay.
Hopefully retire here in 49 days, but we'll see.
Oh yeah, buddy.
Gonna be
Oh,
fun.
pull up that other screenshot. The one with
the 5
the
minute.
with the fair value gaps.
Oh, this one.
Another big thing. This is easy using the fair value gap indicator, which is draws these red boxes right here. Another big thing, and this goes to Dell. Look at where it lines up with the 50 SMA right here. 50 SMA fair value gap. Even right here. You could have taken both of those trades on the 5 minute.
Mm-hmm.
Without even changing charts. Just put a fishing order out on the. Usually the way that I've noticed they go is the fatter. It'll always magnet to the fatter fair value gap.
Oh yeah. Okay. That's okay. That's good
So
to know.
this is a skinny
Huh.
one, right? This is a skinny one. This is a fatter one. I usually put a fishing order out on the fatter one, like right on the tip.
Mm-hmm.
Or sometimes
where can you point it? Can you show me exactly? I don't see anything.
Yeah, hold on one sec.
Because I'd like to
So
see.
I would have put up one right here. But you know what? I've been
Okay.
putting them like almost like in between
In the middle?
in the
Exactly.
middle, right there,
Yeah.
just to get a better entry. So I'll get in right there, like 2 contracts, and then I'll add another 2 up here, and then my stop will be right here.
Yeah. Okay. Well, I mean, like I said, I don't pay attention. I mean, I don't use them. It's just good to know where, like where they are. But yeah, I'll definitely pay more attention to it because I even listened to a video and then they were talking about premium zone and discount zone.
Yeah.
So the higher you are in this one, this is the discount zone, I'm guessing, for me as a short.
Yep.
Perfect. Okay, okay, that's good to know.
If you guys use that, the fair value gap indicators on the pinned messages and futures, you can get this indicator. It's a fair value gap 3.0.
Yeah, can you hear me?
Yeah, I got you.
Yeah.
Yeah. I tried to do that on the indicator, and then I go in. Can someone walk me through? Because I have the indicator downloaded on my computer, and then I want to load it onto Ninja. And I know I must be doing something wrong because I know that there's one of the things to do in the workplace.
Yeah.
But when I did it, it didn't work.
Yeah, I'll connect with you offline.
Okay.
And I can help you with it. Alrighty?
Yes. Thank you.
No problem. Mm-hmm.
Actually, last night I updated. Remember, you told me I had the wrong version of the ICT gap, whatever.
Yeah,
I think I had version 2 or something. Yeah, last night I updated it to version 3. Because yeah, I was up late last night and I was like, oh yeah, let me look for that thing.
Yep.
So after watching that video, of course, so now I have the version 3, not the one you see on the picture right now.
Cool.
One last thing in that case on these fair value gap, how did you put so that it disappeared? Did you put it pierce through or closes or something?
I put close.
Close? Okay, perfect. That's what I wanted to know. All right.
And that's why these ones didn't. That's why these ones didn't close this gap, was because it
Yeah.
didn't close above it.
Yeah.
It would
Okay.
have closed
Perfect.
above
Okay.
it right here. This one would have been gone, but yeah.
Okay. All right. So, and one more question on this fair value gap while I'm at it.
Sure.
So again, when it's red, it's because there's sellers there. Like, okay,
Yeah,
perfect.
because
So,
look,
Yeah,
it goes
yeah.
from candle to candle. So right here, it went from that wick, from this wick right here,
yeah.
to this wick right here. So it create
Okay.
that
Oh, it's
whole
because people
candle
are
was
selling anyway. Perfect.
right there. So it's
Yeah.
red because there's going to be sellers right there and there's an imbalance, but there's more sellers right here. That's why these sellers got in right here.
Perfect.
They probably started to get in right here.
Yeah.
These two candles, and they know that they probably put their stop way up here for this to play out down here.
Correct.
You can see where they started getting in, right around here,
Okay. And
even right here.
Hey, quick question for me though.
Yes.
On the fair value gap, like as far as time frames, because I've noticed each time frame will give you a different zone in a sense. Some
Yep.
do match, and like I think when I was looking at it during the week on a down play, like on a 15-minute, there was one that was there, but then like on the 5 and 1 minute, it wasn't there. It does should it make a difference? Like, should I list when I see it there on the 15 and nowhere else? Should I still try to like look into playing it or just let it be?
Yeah. The just like with the moving average time frame levels, the larger time frame gaps will be stronger than the shorter term. Like for example, let's just say this one was on the 1 minute, right? And then these two were on the 5 minute, these two right here. This is exactly what happens. The 1 minute gap will close just like it did here, and it'll get magnet to the 5 minute gap. So on yours, you probably didn't see them. You probably seen them on like the 1 or the 5 minute, but it wasn't as big. But like,
I would have to check because they do close, so I
yeah,
would
they
have
do.
to check. Yeah,
They do. But yeah, just go. I would play it and look for it to reject on that level on the larger time frame. So let's say here's a 15-minute gap up here and price action is losing steam, because this is what you want to see. You want to see it like this, losing steam, right? Going into that gap. You don't want to see candles like this going up into that gap, because it's probably going to go up to the top side of that gap. If you see candles like this, it's probably going to smash through that gap, probably even go up to the top and then go down. But if you see it like this, then you know it's losing steam up and it's potentially going to go down. So that's what you want to see going into your gap. But you want to see it on the shorter time frames, right? Because you're going to mark off that level. What I would do is I would just draw a horizontal line to all charts and mark it off the 15-minute, and then just keep an eye on the 1 and the 5 minute to see how it's going up into that level.
got it. Okay, yeah, that sounds good.
Remember,
Like you said, use the horizontal on the 15. Create the horizontal line.
Yep.
And then move to the 1 and 5 to see where it's at and see if it reaches that level.
Yes.
Got it.
Yes. And then remember, if you're going short, you want to see it tag that level, and then that last candle that tags it or creates the pullback high, because this is a pullback high right here, this candle right here, right?
Yeah.
You want to see that pullback high and then get in. You don't want to get in on the way up. You don't want to get in on this candle, because it still might continue going up. You want to get in,
Yeah.
well, you would
But this
honestly,
is the 5 minute. It's a bit
Yeah.
harder to pull back high on the 5 minute, I noticed.
it is because like you would get in right here on this candle, even though it went up, right? But your stop would be up here. But on the 5 minute scale, that stop can be 20 points or 10 points,
Yeah, which is
a lot more.
your
than
account
you,
is dead. Your account is dead.
if you can't handle, if you don't have that size of an account.
So in this one, Semper, that's why, let's say when I'm looking at a higher time frame, as soon as it touches it, whatever my level, I tend to take a small position, like on the bearish side, I'll take a small position, but not full, just in case like it keep going because my account can handle it. And then I'm waiting to make sure I get confirmation on the bearish side.
That's fine.
So that I can add to the position.
Like, let's say I get in right here and it pops up and it continues popping up over here, but my stop is up here, but this candle closes right below the 50, then I'm getting in right here. I'm re-adding on this one. I'm adding more.
Okay. And what about your stop? Do you modify the stop then in that case? Lower it?
Same. No, the stop is the same.
Okay.
Because if I move my stop up, then that's going to give me a fatter red.
No, I meant if you had to move your stop, like,
Down.
lower. Me, I would have
Down?
lowered
the other way.
Lowered it? No, I would have just left it the same. You're just giving your, because you got the pullback high right here. And the way the ICT guys do their stops, it's either like one tick above that wick or they put one tick above that zone.
Damn.
And it's totally dependent on your risk tolerance. Because not everybody's gonna have the same size.
Yes.
Not everybody's gonna have the same size account. So if you can't put it up there, then I recommend putting it above the 50.
So which means they put their fishing order, like, let's say in the middle of the zone, in the middle of the fair value
ICT
gap?
guys don't. The ICT guys will put it way up here.
No, but the fishing order, like to get in the trade, like they're going short, let's say.
Oh yeah, they would put one right here. Or as soon as it tags, they'll get in.
Yeah.
I don't see any of them using fishing orders. I don't even know if they know what fishing orders are, but
I don't know what a fishing order is. What's
a fishing order is like, okay, let's say none of this was right here, right? And I see I'm right here on this candle, right? None of this is right here. So I look at all the zones and then I see, okay, this is the biggest zone. So I'm going to put a fishing order out right here ahead of time. So I'll place a buy or I'll place a sell order right here. Like I'll just right click, sell.
And you put in the right click sell at the number like 42.37 or whatever it is, right? Okay.
Yeah, I'll right click.
I see that come up. Yeah. Yep.
And then I'll just wait for price action. Sometimes if I see it coming up strong, like right here, I probably would have canceled it maybe. But since it didn't even come close, I'm still good. Then I see this candle's coming small, then it'll fill it. And then just
so that's kind of what I do on my scalp. But like I was Easy was talking about is that so every once in a while, if I see it go up, like I'm playing along, and on one of these good green candles, and I know I'm making money, I might move my stop up or down depending on what's happening. So I've done that. When you was talking Easy, you was asking Semper if he did that. I do that every once in a while. But the fishing order, I didn't know that's what it was called. I do that. That's kind of how I do my scalps. I put an order out, and when I see it hit that, then it takes it, and then it's an ATM, right? I already got it set up on my up and down. And then if I see it strong, like if it clicks on a 1 minute and it's fast, then I might even say, okay, it's going to go up. So I'll move my up again. It's a long, so I'll move my stop on the profit side a little bit higher because I think it's going to go. I'm making up a number like 2 clicks instead of 1, right? And then I'll move my stop now because now the price has actually moved, and I got profit, and I'm willing to risk, like you said, my risk is I'm willing to risk losing the money I just made or whatever. So I'll move that up or down, just depending on the price action. So I don't know if anybody else does that, but that's how I made my money today. on the reel, and I'm looking at my trades right now on the sim.
Yeah.
Same thing. I did a bunch of trades. I know you said not to, but I'm looking at it. I did a bunch of trades in 10 minutes. I did 1, 2, 3, 4 trades in 10 minutes. But they were all positive, just so you know. So I was scalping, right? Got 1. I got 5. Got 1. It went 1, 1, 1, 5. Or
Yeah, but
1, 1, 1, 5, and then 1 again.
yeah, so that right there is probably like $60 of commission. So
Yes, that's
you
exactly
you want to shoot for, okay, let's shoot
longest,
for
yeah.
$500, right? But if you're gonna pay $200 to make 500 and you're only gonna make 250, you're
I paid my gross
You're-
was 1,200 and my realized was 5 something. So I paid is that $700 in commissions? That was on the
yeah, exactly.
Yeah.
That's a lot.
You're making the
Yes.
market makers a lot of money. They probably love you.
Well, it was sim. It was the sim account. It was a
No,
sim
no,
account, so-
I know, but I'm just saying, realize that in real money. Like you're
Right.
paying $700 just to make 500. You don't want to do that. You want to pay 700 to make $3,000.
Yes.
Yeah.
Yes.
You got to get out of that perspective and be like, I don't care. It's just sim. You got to take that seriously. A lot of people don't take sim seriously, like real money, because it's not emotionally attached, because it's not their money. But as soon as the money comes, they get all scared and shit. It's like, why am I scared this? Because that's not your money. If you want to do that, then just go pay for a prop firm. It's not your money. The most you're gonna risk is maybe like
Their money.
$200. You're gonna risk $200 of your own money, but you're gonna blow up your account losing 2,500 of their money. And you don't want to get in that mindset either, because you're just gonna give them $150 every time. And you're still in that same situation where you're not consistent. You're not, yeah, you might have one home run, $6,000 day, but the next week you're giving it all back and blowing up your
Yes.
account.
Yes.
You don't want to do that.
Yeah.
The whole reason why I created this little system or strategy that I use is to create that confidence and consistency. That's all this does. It shows you how to apply your strategy in a consistent and confident way. Not, oh, I'm just going to take a stab at it and take this trade. I'm just going to take a stab at it.
I just put up in the Discord. I just put up my sim account.
Yeah,
It showed
see?
1,200, 535. I'm like 700. So I noticed it. I'm like, that's a lot of money that I just quote. That I spent more money trying to make those trades than I made.
Exactly. That's
Yeah,
exactly
that's
what
not
I'm
sustainable.
that's
That's
exactly
on the long
what
run, that's not sustainable.
No,
No,
that's
it's
what I'm
not.
trying to
It's
get
not.
through you is like, you're gonna get eaten up by commissions and you don't want that. You want that flipped around. You want to pay 500 to make 700 at least, instead of the other way around.
Yes, but in my defense, I'm practicing strategies, right? So I'm looking, does this work? Does this work? So yes, I'm noticing that commissions are taken away from my money, without a doubt. But I'm learning, okay, that one worked, that one didn't work, right? I can see what's working and what's not working. So then when it comes to real money, don't make those mistakes. In other words, I'm kind of trying to develop my A plus setup, my B setup, like what works, that kind of thing. I'm trying to get some
Oh,
data on what's a strong play for me versus what's a weak play.
yeah, I get it. I totally get it. But don't worry about second and third setups until you have your first setup laser.
Yes, and that's what I'm working on right now.
So concentrate on that. Like if you do awesome on sim on your A plus setup for the next 2 weeks, all free game on your live account. But stick to those setups. And another big thing, create rules around your A plus setup.
Yes,
Because
yes.
if you don't create those rules, even though you tell yourself, I got rules, you don't, because you don't have them in front of you and you don't follow them. I used to be the same fucking way. I said, like, yeah, I'll create this rule in my head. Yeah, don't take a trade unless it's in the golden pocket. Guess what would happen? I would get in at the 60% retrace instead of the 50%, and I was getting smoked. I was like, what the fuck? This fib setup doesn't work. No, I just had to readjust my rules and refine and tune up my strategy. And that's where I started fucking the wheels started turning. I was like, shit, this is a setup. I had to create a system to create consistency. And that's the system that I came up with. And so far, Lasagna Cat said it worked for him. Easy. It looks to be working for him. And just to get back to Judy's question, in what market conditions do you use a trailing stop? I don't use a trailing stop until I hit my first target. That's why you have to have a plan when before you get into a trade. Remember, if you don't have a plan, you plan to fail. Or what to say, if you fail to plan, you plan to fail. That's how the saying goes. So you have to have a plan. I mean, if you want to use a trailing stop right out the gate, it's gonna make it tough because you're not gonna give it room to breathe and room to play out, right? Because let's say you put a trailing stop at the 10 SMA and your price action goes above your entry and then comes back, confirms and tags a 10 SMA to continue going up. And you had that trail stop on there, you're going to only catch like 2 points or 3 points. That's why I always tend to wait until my first target hits. And then I determine on how much money I want to give back. And then I'll attach that moving average depending on where price action is, depending on how far price action is from either the 10 SMA, the 50 SMA. And then I look at my entry. And then I look at, okay, if I attach a trail stop to the 50 SMA, I'm going to give about $100 back. But if I attach it to the 21 EMA or to the 10 SMA, I'll give $50 or $20 back. So it is just totally depending on you. But I recommend that you at least wait until you hit your first target, and you want to have a first target, whether it's
Yeah.
if it's 5 points up, hit your first target, lock it in, and then put a trail stop or move your stop up above your entry and your define your how much money you want to give back. And that's what I use. I don't really I don't do the calculations. I just said, hey, I'm gonna give like 10 points back if I attach it to the 50. I'll give 50. I'll give 5 points back if I attach it to the 10. Because if you put a trailing stop in a real choppy market condition, you're gonna get stopped out. Whether you put a trail stop immediately or before it hits your target, you're gonna get stopped out. Because the way that we use the moving averages, we use the 10 or the 50, and if you attach it, you can attach it with the offset. But that's what I use now. Is I'll use a trail stop to the 10 with the 4 to 6 tick offset, and then the same with the 50 SMA. So there isn't really a market condition that I put a trail stop. I just put a trail stop after
you made your money.
after I locked in my first target.
And can't you set that up on the ATM too?
The trail stop, it is, but it's real hard to understand how to actually configure it. I haven't really messed with that. So what I usually do, I'll use the ATM strategy because you need to have your ATM selected before you enter your order. Because if you have your order, the ATM set to none, and then you place an order and then you change it to ATM strategy, that order will still have no ATM strategy. You have to select the ATM strategy first and then get in, and then you can attach. And then after that, you can attach the targets to a moving averages and the trail stop to a moving average. But what I usually do is, let's just say I do a 10 point ATM strategy. And then I'll just leave it like that and I'll adjust to stop if I have to. And then wait for my first target to hit. And then I'll attach the second exit, my second target on the ATM strategy to a moving average. And then the trail stop to a moving average. And then it's still ATM strategy. You just adjusted it a little bit. That's usually what I do when I trade after hours before I go to sleep.
Repeat that. Say that again.
What part?
What is the function that you do before you go to sleep? You do what? I missed the last sentence.
So I use it like let's say I'm in a play and I go to sleep at 10 p.m. and I enter my play at 8 p.m. If my targets haven't hit, then I'll stay up and hopefully wait for it to hit. I want the first target to hit, and then I'll attach my second target to a moving average. And then my stop loss, I'll move it up and I'll attach it to a moving average above my entry.
Okay.
So I know for sure I might give money back, but my trade will end up green no matter what. And then I go to sleep
Right.
peacefully. Because if you
Right.
don't do that, you might wake up every 30 minutes or you might not get any sleep.
Just
You
to
might
see
not,
where you at.
yeah, I've been there where I woke up and it's been
Yeah,
red and I woke
we
up and
all
it's
been
been way
there.
green. It's like, I don't want to do that. So I
We all
usually
been
try to
there.
wait for my first target so I know I'm going to sleep green and I'm waking up
Some
green.
people. No, I don't do this no more. I don't touch. Yeah, when the market is closed, I don't want to know anything about trading. The only thing I do is that I learn. That's it. Watch videos, watch recaps. That's it. That's all. Too much stress. Like, yeah, I don't want to be stressed.
Yeah,
Anyway,
exactly.
yeah.
Otherwise,
So
don't trade after hours. But I do
Yeah.
recommend that you start futures trading after hours because it's really slow. You can walk yourself through the trade and practice talking through your rules before you're even fucking either in the trade or even before they hit your target. And that's the way that I trained Lasagna Cat. Said create rules where it's kind of a narrative where you're kind of asking yourself questions. It's not like a definitive rule where it's don't get in until it hits this. It's not like that. It's the rule is what do I want to see next? Okay, I want to see price action go above the 10 SMA. Do I see price action above the 10 SMA? Yes. Okay, what do I want to see now? It's kind of like a script. You're asking yourself questions and then soon after that, you're going to know all those questions that you're asking yourself. You're not going to need the rules in front of you. But until then, have those rules in front of you because if not, you're going to break them. And then after that, after going through that same script over and over and over and over again, you're going to be like easy where all the trades look the same. And that's what you want to get to. You want to get too boring. You don't want to be too
Excited.
base hit, loss, home run, big win, and then, oh shit, home run, big loss, home run, big loss, and you're giving all your money back.
Yeah.
You want to see the same play every fucking day, every day,
Yes, so
every day.
I commend Easy on his repetitive consistency. I think that's going to pay off in the long run.
Mm-hmm.
Yeah, you want
Thanks.
stuff that you can recognize and repeat because then you can get recognizable and repeatable money.
Yes.
Like Brandon
Yeah.
was talking about this morning, same scam. It's the same thing. He recognizes it. You can see he looks at the screen and he can see it immediately. I'm like, what is he watching? What's he seeing? What's he looking at? I'm
I've
I'm trying
been
to
that
figure out
same way for 5 years. And every time, that's what I tell you. I know you live in Hawaii and you got to wake up extra early, but you have to
3:30, fellas. 3:30.
you have to show, hey, I'm there with you. You have to show up so you can catch those little nuggets.
Yep.
You can catch those little nuggets. Oh, okay, he's looking at price action or he's looking at volume and he just drops little nuggets and gems every fucking day. That's why you have to show up. And then slowly you're like, oh, okay, now I'm getting it. The freaking light bulbs or light freaking bulbs start to go, aha, aha, oh shit, I'm getting it now. I'm getting it. Now you're getting to the Brandon's level. But you have to continue asking those questions. I like how easy you ask those questions. Pete, Lasagna Cat, you have to ask those questions. Like, what are you looking at? I've asked him 1,000 times, and he'll say, "Oh, I can't explain it." One day, right, and then like 3 days or next week, I'll ask him the same question. Well, what gave you that? What gave you that inclination? Or
Right.
right? And then he'll be like, "Well, I was looking at volume." I was like, "Oh, that's it." And then I look at volume, and then for the whole next week, I'm just paying attention to that volume, paying attention to that volume, looking for what he's seen. Then I got used to that. Okay, and then the next week, okay, what made you see the scam candle? Like, 'cause he'll call out the scam candle like before it even happens.
Yeah, but how does he know exactly? So what I'm noticing is the new guy coming in, right? Is it there's multiple indicators or right? There's a
Yeah.
RSI, the
Yep.
MACD, the
Yep.
volume, right? But now you got the slope of the moving averages, right?
Yep.
Is it over here, under here? And then he changes the time frames,
Yep.
5-1, 5-1, 1-1-5, right? So from a beginner standpoint, and again, it's not like I'm a beginner trader. I've been trading, but I've been using the standard deviation, which is a lot clearer in terms of you just hit that one deviation or it's going to go there or play the opposite or whatever it is. But there are multiple variables that he has used and he's been used to because of, again, what we talked about, screen time.
Yep.
So he'll look at it immediately, draw a fib off the correct candle immediately, and then he knows what's going to happen. And for a lot of us, at least I know for me, I'm like, how is he seeing that? Exactly what you're saying, Stemper. It's like, how does he come up with that so quickly?
It's just screen time, dude. He has 13, 15 years of screen time, and he can freaking identify a scam candle. Like, even before we had all these indicators, he was doing that. And I was like, what the fuck? What's he see? And he could never answer it, but I just kept poking at him like, hey, what'd you see this time? Like, did you see volume? Did you see MACD? And slowly we put the whole picture together. And I've slowly been seeing all those things.
You see the codes in the matrix at the end.
And he kept saying the MACD crossing over, and I'm like, what is he talking about? And I didn't put it in the chat. I should have, but I didn't. I'm like, what is he saying? I'm like, mine is crossing. I didn't want to look like a fool. Mine is crossing, but you made it real clear. Thank you, Semper.
There is no stupid question. Remember, we're
I
all here to
know, but
learn.
you know, we all don't want to be embarrassed, right? I don't want to be
Right.
so,
Like, honestly, like this group is probably like the least bash of like the premium room used to be real kind of combative. Over here, it's like the premium room is like teenagers. Elites are like adults, you know, we fucking treat each other like grown folks. We don't
yeah.
freaking, oh,
Since
that's a stupid trade. You shouldn't have been in. Like, no, we don't bash you. We'll
since
tell
I'm
you, like,
sure
okay.
I'm the oldest guy here, so all of y'all are kids.
Hey,
Is anybody in their 50s? Because I'm almost. I'm about 60.
I think there's one or two in here in their 50s.
I'm
Yeah.
getting
I don't
there.
want to mention them, but I'm 10 years away.
Getting
Yeah,
there,
I'm
but
there.
not yet, you know.
I'm 40, so or about
Yeah.
to be 40, but
My son's that age.
like I said, you just got to keep asking those questions. We never bash on any questions because your question is probably a question that another newbie has and they're afraid to ask.
Yeah, because I've never really used the MACD. I've seen it. I'm like, I never really paid attention to it. I checked the RSI, volume, and standard deviations. I just spent all my first couple of years learning how to build them in Thinkorswim, and
Yep.
I would watch Connor as much as can and screen time, seeing.
Like MACD and RSI, go into the YouTube and go look at Brandon's videos, and he'll I'm using the RSI and the MACD exactly how he is, other than that cross. You know, like this MACD cross right here.
Where are you? Hold on.
Right here.
50 cross.
Right here.
Where is it? Hold on. Okay, show it again.
See right here. Or like this one down here.
Yes.
Where it crosses.
Crosses
He uses
the
that, but
middle
I
line.
usually
Yeah.
I combine that cross with the RSI cross down here. So usually the
Yeah.
RSI will cross first, and then the MACD, and then I look at volume, and then.
Yeah.
But usually I'm looking at price action first. I'm looking for a price. I'm looking for a signal either in the moving average or price action in accordance or in relation to the moving average. And then I start looking for signals, and then I just start stacking shit up.
Do you, because I know Pete, right? He does Fibonacci's. Do you do Fibonacci's?
Who, Pete?
Semper? No,
Me?
Pete does, right? I forgot someone did
No, Pete doesn't do Lasagna does
lasagna.
Fibonacci's.
Lasagna does
Um
I knew it was one of the cats.
Yeah.
He's the one that likes lasagna.
Yeah.
But yeah, he uses them and he's real comfortable with them. He's getting real laser with them. But yeah, like I said, just keep asking questions. He's always dropping nuggets, even if you have the same question 10 different times in 10 different weeks. He's gonna tell you, or he's gonna explain it to you in a different way. And every time he'll drop a little nugget. And pay attention, because he will drop those nuggets. And he just,
It's a lot of
he talks
variables, though.
fast, and it takes a lot to
Yeah, it's a lot of variables. I mean, there must be, I actually think I wrote a bunch of them down. I think I got 10 standard variables, but within those, change it from time frame to time frame. Then you got,
But not only that,
150. You got 150 variables.
and then it changes because it's a data week, or it's CPI
Yes,
week, or it's
yes,
earnings week,
exactly,
and
exactly.
and that's where market psychology comes into play. Like, first, let's get your strategy down. Let's get your setup down, and
Yep.
then you can be like, okay, let's market psychology. Like, I wouldn't even tell you to trade during CPI week or PAL week, but I do want you to take notes, like sim trade. Even if you're live trading, sim trade those days, and then take notes. Okay, what's happening before PAL? What's happening before CPI? What's
Yes,
happening?
yes.
You have
See,
to take that shit down, because the next CPI day, then you're like, okay, it's doing what it did last time, or it's
well,
doing the inverse of last time. Okay, this might happen, and you can try to forecast what might happen.
when then you have the political side of it too, because I know I played a short one time off of a Trump tweet,
Yep,
and
Trump was awesome.
I made like $1,500, I think, on Microsoft dropping in like from a Trump did a tweet, and I was in the market, and I just happened to look at Microsoft, and I saw just a plunging candle, and I just jumped in like immediately, no setup, no nothing, and I just made $1,500 in like 2 minutes. It was unbelievable.
But Trump knew how to play the system. That's why I love Trump, because he knew, I'm gonna tweet this, it's gonna fucking dump the
Yes,
market, or I'm
yeah,
gonna tweet this, it's gonna push the market up.
it was
And
unbelievable.
he knew it.
And knew it. I that, and one day, I know I never really played earnings, but I watched FedEx one time come out with their earnings. This is right before COVID, or right during at one point, and it rocketed up, because usually they say don't play the earnings, and I was but I was watching FedEx, and it just, I mean, that thing ripped. I mean, I think one of the traders in the Discord, I think, made like something like $5,000 in like a minute, or some kind of crazy amount of money. It was insane. I remember that. I was like, oh, I wish I was in on it, and I didn't even jump in. I should have jumped in, but I didn't.
But just like Amazon yesterday, Amazon shot up, right? In 1 minute, it fucking blasted off, and then the next minute, it was already down to where it closed.
Where it
Oh,
started.
no kidding.
Yeah, where it started, and then guess what? It went back up, and it kept going up. So that's why they tell you don't play it,
Oh, I
because
see it. Yeah, right after closing. Yep, I saw it.
especially after markets, you can't fucking
Yeah,
sell. You can't
it's hard.
sell, because, I mean, futures you can, but a stock, if you get in and you think it's gonna go up, it might have gone up, right? But you're not able to sell to get out, because you're not a market maker, or
Yeah,
whoever's
was tough.
allowed to trade after hours.
And
And next thing you know, you wake up and it's all ready. You're like, fuck. You don't want to wake up like that. That's why we tell you don't trade it, because the move always happens. Just like with data, you got to wait for the retrace for you to get in, and then actually play the play. And then
by the way,
another
the
good
data
thing
from
is the
this morning
algos.
wasn't good at all, eh?
Like the algos. The algos, Brandon is laser with those. But If you want to
How
learn
does
how to play the algos, you gotta
That was
freaking
one of my questions. How does he define algo? I
algo
know.
is a big wick,
Okay,
like a
can you
huge
please
wick
put it
and a
here?
small little body. What's that, Pete? Pete, what's
My
up?
little one, yeah, sorry, my little one came and I forgot to
Oh, it's
mute
all good.
myself.
It's all
Yeah.
good.
Yeah. So how does he? So define algo the way that he defines it.
Algo wick is just a small little doji body
Mm-hmm.
with the big, huge wicks, like bigger than normal.
Okay.
Like
Okay.
they're like 10-point wicks or 5-point wicks.
Right. Right. Right.
Those are
Okay.
algos. And
Okay.
usually it has a real small body.
Oh. Okay. Interesting. Good to know.
And usually what happens is it create that body is the over under level.
Oh,
And
that was another question I had. So how does he define over under level? Does he always define it on the version of going long? Over under meaning.
over under meaning price action is above it, then it's probably gonna go up. But if it breaks below it and it retests below it, then it's probably gonna go down.
Right. So always in a long perception, right? If Apple was at $100, the over under is it's going to go up, right?
No.
Okay. So re-explain that again.
Usually, like, let's say there's a small body, but
Yep.
the wick on the bottom side of it is way bigger than the top side of it. And usually the algo is only on one side, it's not on both sides. Like there was one algo that happened 2 years ago. The algo happened 2 years ago, and the algo was like 100-point wick. And it was like, oh, this is an error because TOS took it off. But I think all the elites marked that level off. And then like a year and a half later, when the market dumped during the pandemic or whatever, it came down to the bottom of that wick, even though that wick was like 6 months prior.
Okay.
Where
So algo, he's speaking directly about a wick with a small doji, excuse me, about a candle with a small doji and large wicks. That's how he defines algo.
And the over under is the body,
Yes.
meaning that price action could go up or down, but most of the time it goes and magnets. Let's say the bottom wick was 3 times as big as or 4 times as big as the top wick, and price action is below it, then it's most likely going to go down to the bottom of that wick before it bounces or anything. Sometimes it doesn't. It won't bounce until like a daily level, a standard dev level, or a weekly level, a fib level. It just depends. But let's say the bigger wick is on top and price action is on top, then it's most likely going to go up to that wick on top. That's why he
Gotcha.
calls it an over under level. It can go either way. Doesn't matter which way.
Okay. So
But the inclination is towards where the bigger wick is.
But
And
I
so
think
he-
when
Go
he,
ahead.
generally speaking, when he says an over and under level, whatever it is, whether it's an algo or just some other price level, whenever he uses the term over and under, he generally means as long as price action is above that level, it's you should be thinking long, and if it breaks below that level, you should be thinking short. So he might be his over under whatever. So it doesn't usually he'll do it with that body of the algo. He uses that as an over under lot, but he uses other things as over unders too.
Right.
But that's just like general thing. But that doesn't mean that like if it's under, so you should be thinking short. It doesn't mean that there's not gonna be any long moves under there. You could go down and then retrace for a bit back up. So there could be, and vice versa. If it's above it, it doesn't mean there's not going to be any short plays either. But that's his general thing. If it's the over under, if it's under, it should be basically you should be thinking it's going to be trending down, and if it's above that level, it should be trending up.
Yeah.
Okay.
It's just an over under level. So he still wants you, like he wants it to break above that level. If it breaks above that level, he wants it to come back, retest that level, and then go up. You don't go in just because it broke through that level.
Gotcha.
You know what I'm saying?
Okay. Yes. Yes.
You still have to apply the elite retrace and retest fundamental. You don't want to just like, oh, this is the over under level. It's above it. I'm getting in. Nope. We don't play like that. We want to break that level, come back down for confirmation, and then go in.
Yeah.
If you
Okay.
go in, if you go in, as we try to make objective rules. That's another big thing, Kelsey, is you want to create objective rules. You don't want to create subjective. You don't want to get in just because it broke that level. You want to get in because it confirmed that level. That's the difference between subjective and objective.
Yep.
Subjective would be, I'm getting in because it broke that level. That's a newbie. Or you want an objective level. It broke my level. I want it to come back, confirm that level, and then get in. But even though it's his over under level, right?
Yes. Okay. Yeah, I follow. I'm tracking.
Yeah. All right, cool. All right. Easy. Back to your trade. Kind of got off on a tangent right there, but it is what it is.
That was a U-turn.
Hopefully you guys are getting value out of this, because I mean, that's the reason why we created this.
All right, perfect. So this is my last trade. The last trade happened yesterday, the 26th. On this trade, I was a bit mad. So this is the trade that I was talking about, Semper. So this is the trade on the 30-minute level, this one. So I got in, and then I got out so quick. But yeah, this is why I'm mad about myself, because I got out on the 1 minute instead of getting out on the 30-minute, because that was the 30-minute level that I was watching. And yes, the trade worked, but then this could have been a 20-point trade.
Yes.
I think I got 7 points out of it. And then after that, the trade just kept going. Like, I got out here, but my real exit should have been here at the 200. I didn't expect it to keep going, but it kept going forever. And then I was so mad that I only get a couple of points out of that one.
But what did you see on the 1 minute that made you get out?
That made me get out?
Or what did you see on what chart? What did you see that scared you out?
Okay. Well, no, okay. It's not that I got scared out. It's because the way I trade, it's from one moving average to the other, right? So I got in the trade, and then boom, I reached my moving average. That's it. So I got out. That's the only explanation that I have. But I should have done that on the 30-minute, not on the 1 minute.
Makes sense.
So that's it.
I see a lot of strong candles going down to your target. That's would have been a one inclination to stay in a little bit longer, especially the way that the 10 broke through the 50. It was kind of steep. And then, like I said earlier, just remember I said that the
slope.
Yeah. Earlier I said the moving averages begin to flatten out, right? So the 10 flattens out right here, right? Because you're coming down to it and it's flat. You're like, okay, what's going on? Okay, I want to see. You probably seen. This is where you seen the on the 30-minute tag the 50, right? It tagged the 50.
That's right. Exactly.
And then so that's what I'm saying. When you see your move on the 50, 15, or 30-minute move, it's coming up to the 50 or the 10 SMA. You want to start to look at the moving average on the shorter time frames. So you see it right here. It's flat right after. Oh, gosh, dang it. I got a fire alarm, so I got to come back.
What?
You guys chit chat. I'm in the office today. And
okay.
But take over, Lasagna Cat. I'll be back like in 10, 15 minutes.
All right, sounds good. Sounds good, man. Yeah, so
wait, let me just see if I can wait. Well, okay. Well, in the meantime, wait, let me just see if I have what the 30-minute look like. Yeah, so here it is on the 30-minute, actually. So yeah, that's the 30-minute, and then price action reach. Where did it reach? Yeah, right here. Yeah, right freaking here. Ah. Like I said, I got out way too early, like way too early. Wait, let's see. Is it that one? Oh no, actually no, that was on October 24th. Sorry. It's this one. Come on, open up. There you go. So you see, this is the 30-minute exactly. So that happened yesterday. So again, the same setup that I've been following, and then I'm watching on whatever the different time frame. I always have the 1, the 5. Here, sometime I put the 50. If not, it's going to be the 30-minute or whatever the time frame that that I'm bearish on. I'm gonna put it on that screen. So yeah, that wasn't the 30-minute. So price action was just going up, and I was being patient because, as you see, these are 30-minute candles. So we're talking about an hour and a half until until I was able to get into that freaking trade.
Yes.
But
right
here, like it touched it, I got in and then I got out. But also, I know I gave the explanation. It's because I got out on the 1 minute because I trade from one moving average to the other, but also it's because this is my real account from Apex, the account that I'm trying to pass for that test. So yeah, it's the type of account I cannot let's say I cannot make $500 and then go back to zero. Like they'll close your account if you do that. Like they want to see that you're able to manage risk. On this one, I only took one position based on what I'm. How many did I take? I think I took one, and then yeah, I got out there, but I was being conservative on my strategy just because it's my real account. But on the sim account, this trade I would have been able to take at least 10 points out of it.
Yeah.
But that's what happened.
No, but
yeah,
I like that rule that you traded average to average, right? And you did take profit along the way. Lasagna Cat, what do you think? I mean, I don't think that's a bad trade at all. Of course, you left money on the table, but still good setup, good call, took profit at the right places.
Yeah, I mean, I think ideally, the first profit take would have been at the 50, since that's like It's the 10 is more of like more of a guide.
Yeah.
So I think the 50 would have been, and you took those profit takes at the 50 were ideal because your first 50 profit take was a shy, which is good. A shy is always a good thing. The other one was, just a little bit underneath, so that's awesome. And actually, I could have seen justification to take the whole thing off right there because it's also coinciding with the 666, so that's a lot of support right there,
665.
The only the only thing
I hear you.
the only thing I see
the only thing you see, why he's already back.
That was a quick fire. He must have put out the fire.
No, somebody fucking with the alarm. That's already like the third fire alarm today. Yeah, the only thing that, remember what I say, once it bust, like Lasagna Cat said, I wouldn't have taken this one right here. That was kind of quick. Because it broke and there wasn't another retest. That candle was kind of strong. It was almost full body, right? I don't know what scared you out there. But remember, always look back. Always look back, because these little consolidation zones, if they break that level, I would have marked this level off, or even the bottom of these two wicks off, and then just told myself, if it goes below there, it's gonna squeeze. And it did. Look, it squeezed right here. It squeezed, and then look at that level. Always look at how price action interacts or reacts to your levels, to your moving average levels, or fib levels, daily levels, whatever kind of levels. If it busts through, then it's most likely going to go up to the next level. Over here, all the moving averages, remember, it broke the 666. So the next level is the 200. So because it's inverted, right?
Okay, then this is the question. Okay, perfect. I'm glad you said that. So on this one, the moving averages, they're all fucked up to me, because they're like, sometimes they're properly stacked. Like, you have the 10, 50,
that's the
100,
easiest. That's the easiest
6.
when you're reading it like a book.
Okay, so in this case, now if I break the 666, I should still expect the 200, even though it's 100 that's coming up next.
Yeah, because that's the next level. Take it in levels. On the way up, on the way down.
Mhm.
So
Okay.
it broke the 10, right? Boom. Or what's the next level? The 50. The 50 broke.
Yeah.
But now you're like, well, what level do I choose now? Because I'm at the 666. If these two wicks right here would have been on top of the 666, then I would have locked it in. That would have been a good lock in,
Okay.
right? But they kind of went down below it and they broke through it. So as soon as you see a level, and then look, it started holding the 50. As soon as it broke the 50, these two held the 50 right here. And then what is the 50 doing? What I was trying to say earlier was, okay, you see the 10 flatten out right before I was rudely interrupted. You see that flatten out. So now this one is pointing down, right? The 10 is pointing down. Now,
Yeah.
what does the next moving average look like? Right here, it starts to flatten out. It's not going up no more. If it was going up, if it was still kind of sloped up like it was right here, like it was right here, it's not sloped up though. You gotta look at the slope like a wave. You know, like when a wave is cresting, that's what you gotta kind of look for. So it's cresting, it's cresting, cresting. Okay, now it's flat. What does that tell you? It's gonna crest and go down like a wave, right? It's gonna crash down over here. Then it broke the 50. Broke the 50. The 600, like 90% of the time is gonna be flat. It's not gonna be, it might be sloped a little bit down, a little bit up, but most of the time it's flat.
Okay.
So it broke the 50, it broke the 666. Once it breaks the 666, what's the next moving average? It's a 100 because you're going in sequence down, right? So when it breaks the 666, what does a 100 look like? Right here, it's still sloped down, but it's starting to crest just like the 50 did up here. Look at it, it's starting to crest, and then it flattens out.
Yes, wow.
And
Okay.
when you're still in the move, I know it's different when, looking at it, everything looks, well, yeah, it makes sense. But when you're in the move and you're right here, like I know you're right here, right? And the 50 is still pointed up. And you're like, fuck, I should lock in because of that big buyer wick. But look at MACD, bearish, spreading apart.
Yeah.
RSI broke the 50, right where you got out.
Yeah. Yeah, I get out way too early, like I said, way too early.
But look at this. Look, it broke the zero line, and then it started spreading apart. Right here. See how it broke the zero line and it got fatter apart right here? That tells you that it still has room to the downside. Right before you got out, like right on this little bar.
And
I think
The MACD was spreading apart. And I know that this is hard to see
live.
in live time. It is.
Right.
But if I point it out for you right now, next time when you see this play, you're going to be like, okay, MACD spreading out, RSI spreading out, it's below the 50, it's bearish. Once it's spreading out like this and it creates this little higher low or lower high, then just tell yourself, my
right.
target is a zero line. Look at, you would have caught it way over here to the 200, to the zero line. Remember in the first couple of weeks, easy, I told you use the RSIs as targets. So if it breaks the RSI right here and it creates a lower high right there, your next target is a zero line. The zero line.
Okay.
But I think Lasagna Cat had mentioned that he might have got out too early because he sold it. I know he goes moving average to moving average, but a lot of that he wouldn't have to do it in, like you said, it's very difficult in live to see the RSI spread, the MACD spread, right? If he had not gotten out at the his first get out, let's say his first get out was really his second one, then he still has 2 plays left, right? On because right, it was a buy of 3, right? It's buy of 3. So let's say you move your first, you take away your first
Exit.
exit, right? And you come up with your second one, you got good money because you went through all that first red candle. And then everything that you're talking about, you would have, for lack of a better word, you would have a little bit more time, a little bit more, wherewithal to see everything that you're talking about. Because I think that because you already made money, so you're good, right? You have the money, and now you can start looking at the slopes and the crest of where all of the moving averages are. And then if you didn't go out until your second exit would be, let's say, further down, right? And then you leave the one hanging in to all. In other words, that's the way. It's always easy. 2020 is hindsight, right?
Yep.
If you exit the first one at your second one, and you hold till maybe the 10 EMA, I think you have up there. You hold till you could play to that line. That'd be, so now you have 2 out. One at the 50, one at the 100, excuse me, not 10, one at the 100. And then you're holding that last one, and you can get all of those last bottom ones. I mean, that would be, when it breaks the 200 SMA, or further if you wanted to, play with the money.
Yeah.
You want to know how I would have played it?
Go. Tell me.
You use the RSI as your calibration stick, right? So if you got in right here, and this is just in reference to the 1 minute. I have no idea how the 30-minute looked like, other than it tagged the 50 SMA, your grade A setup, which should have been like right here. Right?
Wait, if you give me a second, is it the 30-minute? Oh no, wait, that's the last trade I want to show you after. It's this one. Yeah, but I mean, this is on SPY. So yeah, that's what it looks like on
that's
SPY.
fine.
So yeah.
You
So
saw your
that's
setup
it.
right there, hit the 50 SMA right here. Boom.
Yeah.
So now you scale down to
The 1 minute or 5 minute or whatever. Oh, actually, yeah, this is the 5 minute, right? No, this is my 1 minute on SPY, but you don't see it clearly. But yeah, this is exactly where it happened here. Ping, and then
so it looked like it probably happened right here in the 1 minute. I don't know, man. I'm just
no,
guessing.
no, I think no, it was much sooner. Like it was almost 3. It was 3 something. Like it happened. I think it happened right here or something like that.
Yeah, probably right there.
Yeah.
But go back to the other screen. I'll show you. This is something that I said in the beginning of your training. I don't know if you caught it or anything, but this is what I always used to tell Lasagna Cat was the RSI calibrates to a moving average.
Okay.
Right? So right here, from right here to right here, look at this. Boom. That could have been your first target. That's why, like Kelsey said, you could have took this one out.
Yes.
And then you're getting out right here at your first target, which would be the RSI. You look at MACD, it's still bearish. Look at the oscillation, still bearish. Everything bearish. Even volume right here looked bearish. So then it breaks a 50. You got out. You locked in 50, 70% or whatever. Now it breaks that. And look, it almost retests the 50. But it doesn't retest the 50 over here. It doesn't even come close to the 50 RSI.
Oh,
So
interesting.
You know already that it's not calibrated to the 50 RSI. Because sometimes the way you know that it's calibrated to a moving average is that moving average will hit the 50. Will hit the 50 right here. So right here it breaks a 10. You know it's either calibrated to the 100 or the 200. But this is what tells you. This is what tells you what it's calibrated to. Right here. It breaks the 200. It breaks the overcool. that's your calibration. Because if it
Oh,
doesn't even retest, if it would have came down, retested the 100 right here, and it would have retested the 50, then it would have told you it's the RSI is calibrated to the 100,
Got it.
right? But
Okay.
it's not. It's calibrated to the 200 because then it goes through here, and then it cycles through, right? It went through all the moving averages, right? Here's a little nugget right here. It went through all the moving averages, and it didn't calibrate to any of them. To any of them,
Okay.
other than the 200 down here. It broke the 200. Now it's lost its calibration. What's the next fastest moving average that it can calibrate to? The 10. The 10 comes over here, hits the 50, and now it's above the 10, and it's right here. So
Okay.
now you look, it's flat, 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 and then look, it breaks the 50 right here, and it breaks the 10. So right there, that tells you it's calibrated to the 10 now. Look, comes back, tags a 50. Comes back, tags a 10.
Mhm.
So now it's calibrated to the 10. So what's the next moving average up? Remember, Brandon always says the moving averages or RSI is recycling or is resetting up, recycling, right? This is a moving average recycle. I don't know if it's exactly how he explains it. This is just my way of explaining it.
Mhm.
So it hits a 50, okay, boom, retest, right? Comes back, breaks the 10, breaks the 50 RSI, comes back and tests the 10 and tests the 50 RSI. That right there tells you that it's calibrated to the 10. And then right here, look, it never broke the 10, never broke the 10, never broke the 10, never broke the 10. And then right here, over cool, what's it have to do? It has to break through the 30 because that's the average, and then it breaks through the 10. That's one signal that it's calibrated to the 10. So then it goes up. So then it goes up and hits the 50 RSI. When it hits the 50 RSI, you're telling yourself you want price action to go above the 10 SMA and hold. It doesn't hold. Okay, whatever. Does some bullshit. And then it loops the 10. Then it hits the 50, comes back down, tags the 50 RSI, and then right here, 10. So once it's calibrated to the 10, it has to calibrate to the next moving average. To calibrate to the next moving average, it probably has to go all the way over here, come up above the 50, right? The 50 is going to be right here. And then what you want to see is come back down, test the 50, and guess what? Come back
And
and
then go up.
come back down right here on the RSI and confirm the 50. If it
Okay.
does that, if it does pulls back to the 50 SMA, pulls back to the 50 RSI, then that's telling you that it's calibrated to the 50 RSI.
Okay.
It recalibrated to the 50 RSI. So then what's your next target? Next target is a 100 up here. What's going to tell you that it's calibrated to the 100? You want it to see hit the overhot and hit the 100.
So it has to hit the overheat, whatever, the 70,
Yeah,
and the 100 at the same time.
yeah.
Okay.
Yep.
All right.
And that's
Got
it does that. It does that with all the moving averages, not just the 100. It'll do it with the
Yeah,
two,
yeah, I know.
but you have to correlate them together. You got to
Okay.
say, okay, it looks like it's correlating to the 10, or it looks like it's correlating to the 50 or the 100 or whatever.
But my
That's
question
how
is,
I know.
what's the benefit out of it? Like, let's say I know that it's calibrated to the 50. Then what? Or like,
Well,
what am I supposed to see when it hit it? Or am I
okay,
supposed to
so
expect a pullback?
no, because you got to take it in reference to the price action, right? So it's calibrated to the 10. What's this right here? What do you call this?
That's my 50.
No,
That's
no,
my
no,
10.
no,
That's
no,
my
no,
10,
no.
sorry.
The price action. What is it doing? What is it creating?
Support or something? Yeah,
Higher
support.
low. It's a higher low,
Okay.
right? So it's a higher low. So that's one thing. And not only that, but it broke this previous high with this wick. So
Okay.
now goes right here. You know, it's calibrated to the 10. And then let's just say it pops up here and it pops above the 50. What's it gonna create right here?
Another higher low.
Yes, another higher low. So now you're kind of in a trend reversal or a trend change or a counter trend pop. So you know that if it pounces right here, your next target would be the 100, but you want to see RSI creating higher lows off the 50 RSI. You want to see that divergence. Even though it's still coming down, you see RSI going, hit it, but it's still going up. That's telling you that it has strength, because remember, it's called relative strength index. So that's telling you that it has strength to go over here, just like right here. You got divergence, right? You got divergence right here because why? It's still coming down. So now it's building up strength. You want to see this over here, because that's going to tell you that it has strength to go up to the next moving average. And then look at the MACD. MACD is bullish, not completely bullish like Brandon likes it, because Brandon would like it above the 0, but you got bullish oscillation, bullish MACD creating higher lows. I guess you can tell it because you can see it right here. Boom, it's creating higher lows, and then you got RSI. Look at, while it's still flattening out or coming down. You see that? MACD and RSI are both moving up while price action is moving down. That's how I can identify bases and counter trend pops. Because it's basing, but look at MACD gaining strength. Look at RSI gaining strength. And then right here, I don't know what happens next, but most likely popped up is my guess.
I think my question is no, it faked out people, I think, or something. 45 right here, 45 is right here. So it went up and then after that came back down. There you go. Right here.
See, but I was able to identify that pop just by the RSI and MACD, even though it kind of popped up afterwards again. But you can identify the bases like that, or a possible trend change.
Cool. Let me close this.
Anybody have any questions, or go for it?
No, it's not a trade on ES. That was a trade that I took on option trade on SPY. On this one, I just want to show it to you because that was so cool, and then it worked out exactly. So this is my A+ setup. So on the night of the 25th, which was Wednesday. So on Wednesday night before the bell closed, I took some put option, just because it's my A+ setup on the 30-minute right here, as you can see, right? So we have the moving averages lined up perfectly the way I like it. And then price action was at the top. So at the top of the 50 SMA. So exactly my A+ setup. So that night I took some options, and then the next day I was able to sell them for 50 to 75%. So that was, anyway. I just wanted to show you that, because sometimes I do play some options, like not that much. But if I see my A+ setup, I'm gonna try to bank on it everywhere that I can.
No, you can bank on it anytime. That's what Brandon uses. Like, he used to use his daily strategy, the same elite strategy on the daily, but to scalp options. That's what he would scalp. He would scalp intraday options, using the weekly, right? Using the weekly option expiration, he would scalp. He would scalp.
But only if he has his A+ setup. Damn, okay.
Chris,
I never thought of doing that.
Yeah, that's what he always used to do. That's what he taught us. That's when I was kind of trying to get into options, but I was like, options are a little bit over my head. Because that's a whole nother beast. But
no,
Dave has that locked in. Dave has that locked in. He's awesome at that. We have a question by Chris. He says, and that can change on the same time frame. What moving average it's calibrated to? Never mind.
Oh, so never mind. You just answered it.
Is that something you came up with on your own or after just seeing it over and yeah. Yeah, that was something that I just paid attention to. Probably when one of the things that kind of helped me come up with that was when Brandon would say, "Oh, it's gonna recycle or it's going to um um what word does he use? He uses a word where they're kind of gonna like it's gonna continue being bullish, but it's gonna reset like all the indicators." So then I was like, how's he talking about resetting? And I was like, oh, okay, so it resets. And you can see sometimes, but the tall tail sign is that 50 RSI and overcool. So or in overheat as well. So when price action is coming up to a moving average, does it look like RSI is going to hit the 50? If it is, then it's calibrated to that moving average. Or if price action is going into a different moving average and it's going to hit the overcool, then you know if it hits at the same time, pretty much you're looking for the levels to hit at the same time. So when it hits a moving average, look at what level RSI is hitting. If it's hitting the 50 RSI and it's hitting the 10 SMA, then you know that it bounces and price action looks like the RSI, then you know it's calibrated to it. Yes, yes. That was on my RSI moving average correlation. So you want to see that. You want to see it. You want to kind of correlate the two. What does it look like? If it like, let's say it busts through the 100 or the 50 SMA, does it look like it's going to hit the 100 by the time it hits the overcool? If it doesn't and it hits and it goes back up and it retests the 50 SMA and it hits the 50 RSI, then you know it's calibrated to the 50, and then look for lower highs off the 50 RSI to hit the next level, which is 100 EMA. Because remember, it tells you that the level has strength to go to the next moving average. Or if you're not using moving averages, it's telling you that it has strength to go to the fib level or whatever level you use. Well, hopefully that answers your question, Chris. Is that it? Is that all you got?
And then that's it for me. I don't have any more trades. That was the last trade. And today I didn't trade. I played Mortal Kombat all day because the market didn't give me any entry at all. Like it was just doing stupidity. I was like, you know what? I'll just keep on playing. That's all.
Today's your graduation day. You get your little.
Oh, yeah.
I'll send you a certificate.
Yeah, I pulled that on my wall.
You get early release today. Lasagna Cat, anybody have any questions, any trades they want to recap?
Want to share?
Yep. Got about another 15, 20 minutes.
No.
I've got some recaps, but if anyone else has some recaps or questions, let's get to those first.
No, I still got to learn how to get all those screenshots for you guys, but yeah, I'm looking forward to your stuff.
Let's do it.
Ooh.
Jump into it. Lasagna
Yeah.
Cat.
All right.
See what you got.
Sounds good. Before that, I just want to say congratulations to Easy. Your progress is amazing. Good fucking
Thank
job,
you.
my friend. Yeah.
Thank you. As of Monday, I'm going ES, baby.
Let's go.
Yes, baby.
I mean, full-time ES. That's what I mean.
Let's
All
go.
right,
I want to see you get funded and do your first withdrawal from your prop firm and keep
Oh,
it
yeah,
going,
I
bud.
can't wait. I can't wait.
Have a nice little gift for your baby.
Oh, yeah.
Let's see here. So let's write a little timestamp here. So this is my first trade. It was on Monday, first trade of the week. And coming into the open, this dotted line going down, that's the open, that's 9:30. And so what I saw and why I took this trade was, first I was looking at price action. So I saw the 666 and a nice flat line here, and I saw the price action moving down gradually in a nice fashion. down to the 666. Huge candle to go down to it, and I took note of that. And a big candle going up. So I thought, okay, this is looking, maybe it's scammy, maybe it's something else, maybe it's real good. All this red volume, you know, that could have just been like exhaustion. Just take out all that red volume, or maybe it was building up for this come down because it came down real hard. Either way, I took all this red volume to mean that was the end of the down move, at least temporarily. But then there's the matter of like, is there going to be a play? So big green candle, another big green candle. So since it kind of tapped the 21 moving average there, I thought, all right, let me draw a fib there, and we'll just see if price action reveals anything. Now, I often like to play the first, rather the second pullback of a move or some kind of formation. But I noticed, so there's a 666 nice and flat. There is the 200 SMA coming up, pointing up in a nice kind of gradual way. So it seemed like these two moving averages were providing really solid support. So the blue one here is the 10 SMA. So I saw that scooping down and then flattening out. You know, so I was, at this point, I was like, all right, I noticed that about the moving averages. And this red candle came down, nice bullish wick through my fib add zone and through the 200 SMA. At that point, I started feeling pretty optimistic. Down here on RSI, right, it had hit its head on the 50 almost. And it looked like it might be doing another pullback. And I was like, well, if we get a pullback, we could get a pop, because these setups often do a pop right after the open or a pop into the open, you know. And so I was like, this could be power for that. We got a MACD cross, sellers stepping out of the way, and small volumes, which often are the precursor of a squeeze. Big volume, these are pretty small, and a big one, but then followed by, well, big relatively, you know, this one's like a third of, and this one's like a little more than a half of, this one's about a half of, you know, that large one, whatever. So I saw them contracting, you know, contracting like a spring, holding above the 200, holding above the ad zone. I was still like, I need to see something from price action that really makes me want to get in. And that's when I saw this doji, and I was like, hello. I was like, maybe like a tick late, you know, but whatever. I got in and feeling good about it. This RSI MACD, it like did like a nice dramatic thing in my direction. So you know, here's the candle body of the open, big wick. So when this candle was solid green up here, up to here, I was like, this is a freaking gift. Let's get out of here now. As it, you know, it also happened to be my 261 fib on that little fib I drew. So that was serendipitous as well as it made sense, you know, as a get out place. And also good of one when looking at this chart to see the potential of it to just be a pop, a really good pop as it turned out, but a pop all the same, because the 50 is pointing down. And as a continuation bull move, it just wasn't saying that to me, you know. So yeah, that was that one. Oh, and also the other thing that made me get out was I had a trend line here from a little longer ago in pre-market, and it came up here and stuff, and I was like, look, it could easily chop this trend. It could easily just plummet. This could be the next in the group of highs. Like, I don't know.
Yeah, the next lower high.
Exactly. So that like so up here, this big ass green candle, a gift. So I took it.
Awesome play.
Thank you.
I gotta change my color now. Yeah, do you see from the lesson that you learned this last week? Remember the wicks?
Mm-hmm.
Right here. Stops get
Yes.
taken out right here.
Yes.
Cause that
Yes.
pop. Cause that pop. And then you got more wicks over here too.
Hell yeah.
These little candles right here.
So you took off
4
profits
blocks.
twice.
Yeah. I you
So
know,
you did. So it wasn't set up, right? You clicked, right? You didn't, it wasn't an ATM setup. It wasn't, you didn't stop out at the just under 261.8 on the fib.
That's how I usually do it. I usually exit manually. Sometimes I'll put my target, shy of the target, like target shy of the target. Or otherwise I'll just click it. Sometimes I'll do that limit order, and sometimes I'll just click it manually. I really don't know what that depends on.
Right, but what I'm saying is that that's like that's two pretty quick clicks there, because this is a 1 minute candle, right? So you're talking about seconds and seconds.
Yeah, totally. Yeah, I don't know. It just, that was a little bit of improv.
Yeah, but great call. Obviously, look at the next candle.
yeah, for sure.
And most of the plays will be like that. That's why you got to look
Especially
at
in the
levels.
morning.
You always got to look to the left,
Yeah,
because it didn't get over there because it couldn't hold over this. If it couldn't hold over this, then it could have kept going.
yeah, 100%. I mean, and like I kind of didn't think of that perspective, but I did think of like the perspective of just like, lower highs coming in. And this is like, well, if this is going to be the fact that it popped above this trend line, it was like, let's take the pop, because
Yeah.
continuation and follow is like that's speculation and not even that likely. And the reason why I didn't believe it was likely was because I don't know, something about the RSI. But the main thing was this a lot of circles now. The 50 moving average sloping down, It just, yeah. I didn't see enough of my usual suspects agreeing,
So it broke your pre-market yellow dash, right? Wasn't that yellow dash the pre-market?
Yeah, it was it was a trend line I drew manually. It wasn't a hard-coded line.
So you drew that it broke
Yeah.
it broke that. That's one signal. You look down at the RSI as two signals, and then you're like click. But I'm surprised, because you're a Fibonacci guy. I'm surprised you just didn't drop it a little bit below the 261.
What was funny to me was I didn't even notice I had that fib drawn out, and I didn't even notice that it was nearing my fib target when I took it out. That was like something when I look back, I was like, holy shit, I played the fib target.
Right there. Yeah, you couldn't have played it more perfect. When I first saw it, I thought that's what you did.
That was excellent. The only way that I could in any way take credit for that would be if I'm like, yeah, like maybe I'm subconsciously knowing the fib so well that that's where it's at. But nah, I don't believe that that's what it was. I think
But for me, for learning, right? That's another confirmation point. In other words, everything you said, I'm taking notes on. You got the down sloping, that pre-market dashed, right?
Right.
RSI and volume, right? So all of those things matched up, and on top of all of that, 261.8.
Yeah.
So like your entry was good, and boom, good money. Yeah. So I mean, that's that for a newbie-ish guy like me, newbie at least on this future stuff, trying to figure out, hey, that's a good exit point, and I'm working on that's what I'm Fibonacci's, right? So like I guess you could even say if you were playing real safe, you could have gone, let's say you put in 4 contracts, you could take 2 or 3 at the 200% if you're skittish, and then the rest of that, and as that candle was moving up. But I get that at the 2.6, so you could take 2 there and 2 there.
Yeah.
So I like this is great. I'm having a good time, you guys.
Very glad to hear that. Yeah. These meetings are like where I really got my bearings, because I've been here since the beginning, and that's like quite a few years now, and I didn't really know how to digest all the lessons, and I would say to myself, damn it, I know so much about trading, and I know so much about intraday trading, and like yet I am not able to implement my knowledge in like a consistent way, in a successful way. But these meetings right here are what I've really helped, and like
that's what's happening to me. Is it happening to me?
Yeah, it's amazing. And it was basically me like copying Semper's strategy. I was like, yo, I love the way you're playing, Semper, and like I want to see what you're doing, and like it's been really, really illuminating. And like, there may be like some things that are different about like the way I see it and the way he sees it or the way other people see it. But it's like the bottom line is like sharing examples and lessons with one another and talking about it. Holy shit, conversational learning is the best. So like
Indeed, indeed.
yeah,
You get direct, like you get the direct confirmation of what you're thinking or what you're saying.
Yes, yes.
But
yeah,
not only that, it gives you a different insight because, like Lasagna Cat says, his strat. Even though we're using the same strat, we can all be using the same strategy. We just use it a little bit different, but it's different because it's tailored to your own style. You know what I'm saying? Um, Lasagna Cat, both me and him used the 10 and the 50 before Easy came in. Me and Lasagna Cat were long players. Like we played nothing but long, nothing but long. And then Easy came in and he's like, "Oh, I'm both player. I'm a short and a long." And then
Much variant.
after the first week, he discovered that he was a short player. But that's good because it helped me in my short game and it helped Lasagna Cat in his short game. And now we're both going short a lot more than we used to.
yeah. I recapped a couple of my trades. I don't know a few weeks ago where I used easy setup and like man, it's like I'm usually very lasered into my own self narration, which is like geared towards longs. But then when I see his setup pop up, I'm like, oh shit, and like I found it really easy to play. So
Yep.
awesome. Thanks again, Easy.
Welcome, welcome.
Yeah.
So yeah, that's why I knew that I wasn't the only one struggling after blowing up a few accounts. And I said, there's got to be other people struggling. It has to be like we called it like a breakout group. And it was just 10 of us. And we just, every Friday we'd meet like, okay, well, maybe other people would be interested in it. Only a small group, but hey, the small group lets us give you more attention to your strategy. So yeah, but awesome trade. Yeah, that definitely would have went down on the 200. When I used to use the fibs, that was my first target. Well, actually, my first target was a 161, and my second target was a 200.
Yeah.
Depending on how squished they were together. Like this is kind of squished, so I would have probably made the 200 and the 261 as my target.
Yeah.
Where did you start your fib draw from?
Kind of from
All
where
right.
that red doji right there, that
Yeah.
green right there.
Yeah, the high green. It's the fib that I use. It's only these two candles.
Yeah.
It's a very compact fib, just the top of this one down to this one here.
But
Yeah.
one of the nuggets that you want to take out from that is you want to fib a pullback or a candle that has an interaction with the moving average.
Interaction with the moving average. Okay.
Yeah. So
Yeah,
like the bottom
Mm.
to a candle that has interaction with the moving average.
Yeah,
And what moving average is that right there that crosses on?
yeah, that's the in this case that's the 21,
21.
which at the time was starting to flatten out. If you look at the dash that's right on the candle I fibbed, it's flat.
Yeah.
Yeah, that's good. I'm noticing right now, which I didn't notice before. I don't think I noticed it before, is that the bottom is sitting on the bottom Bollinger Band. So, so
That's
that's a
two
cool thing.
confirmation.
Yeah, it's a cool thing as well.
Is that a golden level too? Golden over under level?
Oh, this right here, this is the 666 moving average.
So that's another one. That's like
Perfectly flat.
three supports right there.
Yeah, it is perfectly flat. So that's awesome. I thought it was a great look that the 666 was perfectly flat and that the 200 was sloping up
Yep.
and that the 10 was coming in for a scoop. And my entry was like when it was beginning the scoop up. So I was like, yeah, this is nice. This is all right.
Yeah, and it looked like it created a inverted head and shoulders.
Mm-hmm. Yeah, over here. Little what you call them?
Great trade.
Upside down bird wings over here. Yeah. Sweet. All right, let's see here. See what we got for next trade. What the hell? Close this down. What's up with this screenshot? All right, so here's Tuesday. So this was an interesting trade. Sorry about all the lines. It's fucking chaotic down there. So this one, I don't believe I had a fib for, or if it did. No, I did have a fib for this, but it's like, it's on the side of the screen. So yeah, there's all these gray lines, and that's the fib that I drew from like uh, watching something else in pre-market, watching some price action. So I don't think it actually pertains to this trade. So sorry for all the lines, but I do know why I took the trade. So what happened here was so I was watching it, I was like, okay, we got a higher low before the open. And we got what you call it? RSI is sort of tickling on the underside of the 50 right here before the open, and then like coming up like this, into the open. This line right here on the right, that's not the open that I'm emphasizing right here. That's the point that I got in on the trade. The reason why I did it over here is because you can't really see my oscillators down here. All right, so it opened up, huge green candle, and then this one had continuation up, and I was like, hell yeah, let's get a pullback. I saw TTM was getting ready to get its squeeze on, and or at least like showing promise to the upside. And also back here, as I mentioned before, my oscillators RSI, you see is like doing higher lows up through the 50. All right, and maybe coming down for another one. I did notice that overheat was just ahead, but I knew we had some headroom. In part, just like look at MACD below, huge spread. And so came down, nice pullback, and it put in like this doji, right? So I was like, it was like huge push, one doji, two dojis. I was like, I'm getting in. And small pullback there, nice up here. So I took my first profit because this is pre-market high, and pre-market high can be a real resistance. It's like something I take seriously. I think maybe if you look at your trade close enough, you can tell like whether or not it might be a thing or not. But as far as I was looking at for this trade, I was like, let me just take some off right here. That's just what I'm gonna do. And because also we're going up into overheat over here. If you look again at the right, at that point, it's starting to play with overheat. So I took off half, not whole. And then I gave the rest a little bit way to ride. Looks like there was some, what you call it, standard dev interaction right here. Standard dev +1. So I figured, you know what, if we pushed past pre-market high, and if we're up against standard dev +1, let me take off the rest. These were manual clickouts. It's possible that this one wasn't. I might have put this one hard. That might have been a hard one. I don't remember though, not for sure. And so, yeah, clearly a few points up here, but I respect my targets. I thought they're good ones, and I respect the play. It's basically higher low and then two higher lows. I probably did see that at the time, that it was like sort of a second leg thing. The thing that got me most excited was the two dojis. And that's it.
Yeah, it's good. It's very good. I like the fact that you said the pre-market you took profit, because I did notice as well, pre-market, whatever, and then as soon as the market opened, like the pre-market high, it's usually a zone that you'll have a lot of price hesitating, or if not retrace the whole thing, going back up and down. So yeah, that was a good move on this one.
Thank you, Easy. And even this morning, or it was maybe even after the open, Brandon was doing some TA, and some move had found support at pre-market low, and he just sort of reiterated that pre-market low, pre-market high, that those two can often offer the first stop for supported resistance, or maybe other opportunities for support and resistance.
But what I've come to discover while I'm doing price action research,
Mhm.
and I haven't really tested it out fully because I gotta pull up TradingView to be able to test it out. So I would have 3 platforms on. But one of the things that they say is look at the lows and highs of the previous we would call a kill zone, right? Kill
Yeah.
zone being European market, Asian market. Because usually what tends to happen is, let's just say this line right here, this gray line right here, is the previous high from the European close or from the Asian close, whatever.
Mhm.
Usually what happens is, if New York kill zone can't take out that high, then it's most likely going to reject.
Mm.
So let's just say this is Europe. Europe over here, New York opens, right? New York. If it can't come back up and take it, retest it and go up, then it's most likely going to go down. Retest this European low and then go up.
Okay.
Because that's what liquidity is, because there's probably a zone over here somewhere before this down came. There's a liquidity zone right there that the market makers want to take out, and they'll take them out. Remember, they're always in the business of taking you out. Don't
Yeah.
ever think that the market makers are on your side. They provide liquidity for you to do your move, but they'll freaking take it right back. And that's what happened right here.
Yep.
There was liquidity somewhere over here, and they just, all right, we'll just take your money. Boom. Took your money. Guess what? It maybe ended up going long over here somewhere. Because there's this liquidity right here. Took out all these shorts, getting short on the bottom. That's why the number one rule is, don't long tops, don't short bottoms.
Don't short bottoms. That's
Because
right.
you will become the liquidity if you can't find liquidity.
That's right.
I would hate that.
And that's why Brandon always says, don't short bottoms, because this is where the liquidity is. Market makers are looking for liquidity. Where are their stops? Remember, market makers pay Ninja Trader, pay TOS, pay Robinhood, so they can, so they get inclination of where all the normal folks put their stops. Oh, normal folks put their stops, or if they're going short, they're gonna put it at the next zone right here. They'll put it up here, right? They'll put it up here. So you know that this is just an example. I'm not saying there's liquidity here. You know that if it gets over this liquidity zone, it's gonna squeeze. Look what happened. It got over it, came back down, took all the stops out, and squeezed. Same over here. It's always gonna take out the liquidity that was left over from the previous high or the previous low. That's why sometimes you'll see price action go like this, come back up, and then it's consolidating, right? Consolidating, and then it'll do a fresh low, and you're like, what the fuck? And then you get stopped out because you entered right here and your stop was right here, right?
Yep.
You get stopped out, and what happens when it stops you out? It causes a pop, and it's gonna cause a pop to go up.
Yeah.
Why? Because all these stops right here that were in these two little wicks were taken out by that fresh low, and then it caused a pop.
Yeah.
And Lasagna Cat, you did an awesome job this week of identifying that. Just keep it up, dude. It's there. You will start to see your price action skills go way up.
Yeah, thank you. Here's just a little example of one of those. I've just been like really into that. Checking out like where price action is at, where those unfilled orders are, and how they result and how you can play them later. In particular, and this isn't a recap, this is just sort of like some of the things that Semper is referring to that I was, getting the hang of. It's just like when you identify a range, it's like how you can actually play that range like in the middle, which is always more dangerous, but also at the bottom is by identifying these guys and playing off of those. Again, that's a work in progress for me, but that looks about right, Semper?
Yep. You could just
quick question.
like,
I have a question.
Go for it.
Yeah, the question, you know, when you say don't short the bottom,
Bottoms. Yep.
don't long the top.
Mhm.
So my question is, what if my setup is showing at a bottom? Like,
Then wait for the
then
pullback
what?
to
What should
retest that bottom.
wait for the pullback to retest that bottom?
Yep. Right.
Don't short the bottom. Wait, I'm trying to see how I can get a pullback on a like the pullback high. How are you talking about? What do you mean?
Yeah. So,
Mm.
um,
Oh, dang.
so it breaks. Let's just say this is a short play, but a long play, right? So on the 5 minute or 30 minute, you see your A plus setup. But
Yeah.
on the shorter time frame, you will see it retest that same setup. That's why when I told Dell, like, or somebody, I said mark off that level. Make a horizontal line from the 30 minute, but make sure it transfers to all the charts. So like that, you have that level. You have that level on your 1 minute and your 5 minute chart. This is something that I picked up from Connor when he used to do the standard def system. He used to do it on the 1 hour, on the 4 hour,
Okay.
and then the 30 minute, I think. The lines were like this, right? The standard dev. And then price action, he's like, oh, it's coming up to let's just say +1 right here, +1
Yeah.
resistance on the 30 minute. So then he
Mhm.
would mark a line. He would put a line right there, and then that line would transfer to his smaller time frames, to his, the 1 minute chart, and then the 1 minute chart would break that level. Let's just for instance, let's just say right there, it would hit that level. He wouldn't get. Connor was a little bit more aggressive, where he would just get in at the tag of the standard dev. He would just get
Okay.
it. Brandon, he would mark that level off. He would mark that level. Let's just say price action is coming down from over here, right? Here's your 30-minute line right here. This yellow line on the top. That was your 30-minute A plus setup. And this is the 1 minute. So it broke that level on the 30 minute. It hit it on the 1 minute. It broke it, but then you gotta wait for the retest of that same level for it to go down, and then you would catch it
Okay.
right here on the retest. Because I've noticed that on the 5 minute, it would retest on the 1 minute. But like it would tag the 50 SMA on the 5 minute, and it would retest the 10 SMA because the 50 SMA lined up with the 10 SMA on the 1 minute.
Are you just talking about any like larger time frame level or larger time frame moving averages?
Any level, any
Yeah.
level, any
All right.
level that you want to use. I'm not
Yeah.
just referring to moving averages. I'm referring to moving averages in the essence where the 50 SMA on the 5 minute lines up with the 10 SMA on the 1 minute. So then you would wait for it to break the 10 SMA on the 1 minute, retest the 10 SMA on the 1 minute, and that time it should be retesting the 50 SMA or testing the 50 SMA on the 5 minute. Therefore, giving you the pullback high, good entry to get in on the 1 minute. When it retests the 10 SMA, you would still wait for the pullback high, same play strategy. And then at that time, you're already getting the tag on the 50, which is still gives you your grade A setup on the 5 minute, but you're playing it on the 1 minute. On the 1 minute, it would be your C grade setup or B grade setup. But when your A plus setup looks like the A plus setup on the 5 minute, then take it. Don't take it
Okay.
wherever, right? Don't take it wherever, but still practice that entry.
Yeah.
You still want to practice that entry. Just because you see it on the 5 minute, you're making that 5 minute subjective. You want to make that 5 minute objective.
Okay.
You want to wait for the retest and then get in. On the 5 minute, it's not going to look like a retest, right? But if you have them both up, it will be the retest because on the 1 minute, it tagged the 10, right? And on the 5 minute, it tagged the 50. But then on the 1 minute, it pulled back And then on the 5 minute, it's still the same candle. It pulls down, right? And then the next minute, it retests a 10 on the 1 minute. And then on the 5 minute, it goes back up and tags a 50 again on the 5 minute candle.
Okay.
And then you would get in at the break of the pullback high, you know, for entry short. And then the next candle on the 5 minute, you're already in and you're just waiting. You're just waiting to hit your target. Remember, since you're having issues with your targets on the 1 minute, then target the
Yeah.
put a level just like you did to get in on the 5 minute. So it would be the 100 EMA on the 5 minute, and it would be the 50 SMA on the 1 minute.
Okay.
If you can do that without marking a line, then don't mark the line. But if you can't do that, then mark the line of the next level on the 5 minute. So it transfers over to your 1 minute chart.
Mhm.
Now you got a target.
Okay.
And then just pay attention how price actions reacting to your levels. That's all you have to do. Mark it on the
Yeah.
higher time frame. If you see the play on the 30 minute, then keep an eye on the level on the 5 and the 1 minute. Because you don't have to look at the 30 minute because you already have your mark, you already have your A plus setup marked off, and then you already have
Yeah.
your target on the 30 minute marked off.
The
So then-
target as my exit.
Yeah.
Okay.
Yeah, so that's what I would do. I would mark off my entry. Like if you see price action going into your A plus setup, going into the 50 SMA, then just mark that line off. Of course, the moving averages are going to move, but you still have that, and then just keep an eye on it just to see how price action looks around those levels.
Perfect. Thanks.
Yep. Well, thanks everybody for stopping by. I got to call it there. But yeah, thanks for sharing. Good luck.
Thank you,
And
guys.
Number one thing, stick to your rules. And I'll still be here if you want help. Just because you're on your own now. Don't mean I won't
for
be
sure.
here.
Dude, I'm gonna be here
I'll
every
be
time,
here.
just like you.
You continue on with your consistency. Take your confidence. Don't get too cocky,
Yeah, yeah.
but stick to your rules. Stick to your
Mhm.
strategy. Don't add another strategy until you're fucking up $1,000 or really confident. Be like,
Until
okay,
I'm up 10 freaking grand on my
Hey.
bank account.
whatever it is, don't deviate from it. Don't think your
I will
strategy
not.
is shit. Don't just if you're having remember if you're having a bad day or two red days, just take the rest of the
Yeah.
week off. Look at the charts, but don't trade it. Just make like mental notes or actually journal like, okay, this market looks good for me or not, and then just close it down. And then at the
Yeah.
end of the day, take your charts. Lasagna Cat, do you have anything to add after he goes live? You're the first one that gone through it.
Yeah, number one, congratulations. Number two, stick to the plan. Stick to the
That's
plan.
it. All right.
Feel that confidence you're feeling and remember where it came from, and
Perfect.
abide by those practices going forward.
All right. I will. Wait for my pullback high and then boom. Let's go.
Yeah.
And then
Thank you, guys.
I'll be looking for the next candidates to go through this system. Like I said, I might take on 3 at the same time. And now hopefully I have Lasagna Cat and Easy to help me along the way. But yeah, we're gonna continue rolling on to the next members that are struggling or new members that are just joined. Come on in and we'll help you laser in your strategy or find a strategy and then find your way. Kelsey, keep at it. Keep on working hard. Don't overtrade. Look for your strategy. Have a good weekend, everybody. See you guys on Monday.
You
All
too.
All
right.
right.
Thanks.
Later, guys.
Have a good weekend, yeah.
Right. Aloha.
Aloha. Let's get it.